AMC is doing it, ladies and gentlemen. The stock is down about 2%. This is very positive relative to what's happening in the broader markets. Apple is down almost 2% today. I would say AMC, this is a pretty bullish day overall. Now, we are getting some comments on the debt ceiling situation. Now, debt ceiling on one hand is like, a default is the worst case scenario, right? Nobody really wants a default. I don't care how bearish you are, you don't want a default. Now, you may not need to see a default to get some big downside in this market, and we'll explain why that is, how that will affect stocks such as AMC. It puts shorts in a very bad situation. It's kind of comparable to like cost to borrow fees jumping to 1,000% in terms of the pressure that gets put on shorts or will get put on shorts here in the near term future, because some of these comments we're getting today that I'm going to read to you guys are not good at all. Now, on top of that, you're getting some news from former Fed Chair Bernanke, that was the Fed Chair in 2008, which are kind of weird. We also had this secret meeting from Powell that is still taking place. We really haven't gotten any updates on that, but the markets are falling, so maybe someone somewhere knows something. So we're going to get into everything you guys need to know. We're going to talk about this relationship as well between volume and AMC, something we touched on in the last video, but I kind of want to wrap in all of these different concepts that we talk about. This collateral crisis, or just collateral getting squeezed, the low volume with AMC, how downside in the markets could really put AMC in a favorable position for a short squeeze, guys. So we're going to get into all of this information. Stay tuned, and in the meantime, hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. If you guys want to come trade with me live in real time every time I make a trade, link down below in the description of this video. So first and foremost, currently, with AMC, there's things that are going on under the surface, right? We know that with shorting a stock, there is unlimited risk. You know that. So you got to put up collateral. You got to put up money in case that trade were to go against you, because there is unlimited risk. As the risk goes up or down, more collateral is needed. Well, what we're looking at currently with the debt ceiling, and really anything that causes the markets to fall from here, is going to put more pressure on the shorts, because they're going to have to put up more collateral into their short positions. They're likely going to have to pay higher cost to borrow fees. All of that is not good if you're short on a stock, especially if you're short on a stock that has already fallen, right? Going short on stocks is a way to hedge out a long portfolio. That's the reason why shorting exists, that to kind of hedge out, but also to discover kind of dislocations and mispricing in names. That's why people like to short stocks that they think are overvalued, right? It keeps the markets in alignment. Well, if you're using AMC to short AMC as a hedge for downside in the markets, maybe that's not a good idea, because maybe at this current level at $5.02 per share, AMC has already felt that drop, because, I mean, over the last like 10, 15 days, AMC has fallen from over $6 per share to $5 per share, a drop of almost 20%. It might not fall to the same degree as hedge funds would need to hedge out their portfolio. So in terms of that, if you got to put up more collateral to fund an AMC short position, AMC is no longer dropping the way the broad markets do, and there's this overwhelming pressure and fear that maybe something good comes out of the courts, and maybe AMC stock will benefit from that. All of this doesn't look good as a short that is short in AMC. Okay, so we have that. Now let's get into direct comments and news on the day that is affecting this market. Number one, it's the debt ceiling. And it's very weird, guys. This is a very weird situation. Some comments sound really good, that meetings are productive, and that we're going to get a deal done, or we think we can get a deal done. And then other comments come out that are coming out today, just in the last 30 minutes or so, McKendry says big differences in spending and on the debt ceiling. He also says that they can't say when talks will resume because Biden and McCarthy are not meeting today. They had no plans of meeting today, but the deliberators are kind of meeting today. So that doesn't also sound good as well. They're saying there's big differences here on spending, and that's a point I highlighted in the intro of this video. You don't necessarily need to see the worst case scenario like a default come to life. You could see a debt limit that gets raised but cuts a lot of spending that is also negative for our markets because inflation's not good. We know this. Spending leads to inflation. But the markets have held up so well because we're still seeing so much stimulus. We've talked about this before. The stimulus is no longer going to your bank account. It's going to corporations' bank accounts and on, tax credits and all the different ways that they are spending money. The Build Back Better bill was like $2 trillion, $1.5 trillion. A lot of spending, right? So markets look at that like, hey, maybe we got a backstop here. Maybe this will help us avoid a recession. If some of that gets rolled back, probably going to be a negative thing for this market. Now, keep in mind, keep coming back to this. How does this information make a difference in short positions? How does this make a difference in a hedge fund's portfolio? Okay. AI, we've talked about this before. I don't want to get too far into this, but your biggest stocks in the world happen to have been the most positively affected by this AI hype. It's not small caps, it's not mid caps, it's the mega caps. You're going to have NVIDIA earnings tomorrow and after hours. I don't care which way NVIDIA goes. If they have good earnings, bad earnings, doesn't matter. I think personally, AI hype has gone far too far or far too high, far too quickly. And I think you do give some of that back after NVIDIA. And I think NVIDIA will affect stocks that they typically don't affect. NVIDIA earnings will affect an Apple, a Microsoft, a Google, an Amazon, when in the past, even last quarter, NVIDIA didn't affect those companies, but AI is now here. And that is the big driving factor of all of these names in 2022. They haven't been rallying off of fundamentals. Now, when you take that into consideration, some downside pressure that could be coming specifically to big tech, where hedge funds are the most exposed to a downside move, meaning the less hedging that is being taken place is happening on those mega cap stocks. Those small and mid cap stocks, a lot of them are already toast. They're already lower than their October lows. Like, they've already been thrown to the wolves. Big tech has not been. So at this current stage going ahead, it looks like there's more risk in the mega cap stocks, the ones that are not hedged out nearly to the same degree as some of your stocks that have already fallen. Okay, so when you add all of what I said together, I can't sit here and make a bullish case for this market. Meaning, I can't sit here and make a bearish case for AMC unless you have something that comes out with the courts, and that would just be ironic timing, right? Now, if we look at what former Fed Chair Ben Bernanke says today, he says that there's more work ahead to control inflation. He thinks that central bankers will have to do more work to tame inflation. A paper from Bernanke and economist Oliver Blanchard notes that inflation has evolved since ballooning to a 40-year high in the summer of 2022. In a discussion about the paper, economist Jason Furman noted that fiscal policy played a large role in boosting inflation, but the less favorable sin was monetary policy. Fiscal policy. Federal government. They played a large role in boosting inflation. And, inflation, let's admit it, typically inflation, you can get rich off of inflation. Right? It makes housing prices go up. It usually makes stock prices go up. It makes a lot of things go up, a decent amount of inflation. As long as you don't get unanchored, think to what you've seen in 2020 and 2021. Stocks went up, people were expecting inflation, the money supply drastically improved, right? It got huge, okay? So you mix Fed comments with a debt ceiling crisis, with AI earnings that could collapse the AI bubble. Mix that with small and mid-cap stocks that are nowhere near their highs, like some of these mega-cap stocks that are net already short, that might not fall as much as the broad markets, and I would almost say that with certainty. I can sit here and make a pretty compelling case for margin calls that could be coming soon with AMC stock. You just need that first domino to fall, and I think it's going to be a pretty quick downward spiral in collateral that feeds into margin calls. Now, if at the same time AMC does get a positive catalyst, if GME earnings are positive in between June 2nd or June 8th, all bets are off. I mean, from there, you could rally exponentially. So it's very uncertain how things are going to go. The debt ceiling could get passed with no stipulations. The government could keep spending and all this. It could be a very bullish thing. That's your disclaimer. Who knows what's going to happen? Just what is the most likely scenario? Well, I think it's exactly what I just said, right? AI, the rally has got to come to an end sometime. The debt ceiling, even if it does get raised, it looks like there's going to be some pretty big spending cuts, which is negative for the stock market. And when you look at the Fed, they're not sounding too optimistic. A lot of Fed members, Fed Bullard came out yesterday and said we might need 2 more rate hikes. Fed Daly says we're going to stay ultra data dependency. That was the $1 million question, as the reporter said to her. So, I mean, when I put this stuff together, I mean, I can make a pretty bullish case for AMC stock and for margin calls, guys. So there is that. Now, I want to dive into the data here with AMC stock, and then we will let you guys get on with your day and wrap up this video after looking at the technicals as well. So AMC stock right here, right now, if we take a look at the short interest, sitting at about 25%, 661 million shares currently sold short, 32.5% free flow out on loan, 167.75 million shares currently out on loan, days to cover 5.58, cost to borrow 5.2, and 100% share utilization. If we take a look at the option activity, no surpriser here. You've seen 6 orders today totaling $2.13 million with a positive order value of 0%. And where is the options concentrated? The $10 and the $13 puts. Now they're pushing it back to September 15th. So it's not like super bearish bets because they're deep in the money. It's like the least risky way to, you know, play options in a stock to get some leverage. That's what they're doing. It's not like they're betting the AMC stock is going to crumble anytime soon. They're just synthetically shorting AMC. And we've talked about that before. My version of synthetically shorting AMC might be different from yours, but my version is what we're seeing now. You already got low volume, so keep that in mind as a backdrop here. But they're buying these deep in the money puts. They're forcing market makers to short the stock, which doesn't get recorded in the short interest. So it's not like we can quantify what the short interest actually is in AMC, what the squeeze potential could be in AMC, because they're buying these deep in the money puts, which when they buy those and they're so deep in the money, intraday swings on AMC, a 1 or 2% swing up or down. We've seen like 4 of those today. That leads market makers to short stock. That is not, again, recorded in the short interest data. So I think the short interest could be a lot higher too. On top of what I said, take it for face value if you want to. 25% estimated short interest off float. Include the market maker shorts that have been pushing this stock down. It's not the shorts like shorting shares. It's market makers shorting stock that has pushed the stock down. Think about that and then try to quantify what the short interest actually looks like. Is it 35%? Is it 37%? Is it 30%? All I know is I'll tell you it's a lot higher than 25%. Okay, so wanted to put that in this video. Now, cost to borrow average at about 84%, cost to borrow max 356.8%, cost to borrow minimum 64.65%. Interactive Brokers has about 400,000 shares available to be lent out with a cost to borrow fee of almost 60 Now, let's go back to the actual charts here. 50-day moving average, again, at $5.03 per share. AMC is at $5.01 per share. Pretty damn close to that 50-day moving average. You want to see if we can close above that in regular trading. If not, I would imagine that we go higher than that in after hours, because what doesn't trade in regular trading or in after hours trading? Options. The instrument that is pushing AMC stock down does not trade in after hours. So you want to watch to see if you do break above that in after hours. That'll be a very encouraging sign. All in all, you're above that demand zone in between $5, $4.80 per share. It's no surprise AMC stock breaks under $5 per share and always has closed above that every single day. If you take a look just for a while now, right? Back here on May 15th, you close $5.14 per share. Hit the low at $5.03 per share. You hit the low the next day, $4.94 per share. Closed at $4.96 per share. So a little bit under $5 per share. Still in that demand zone, down to $4.80. The next day after that, you hit a low of $4.87. Closed at $5.10. The day after that, you hit a low of $4.99. Closed at $5.07. The day after that, hit a low of $4.96. Closed at $5.03. Yesterday, you hit a low of $4.96, closed at $5.12. And today, you hit a low of $4.98, and you may close slightly above $5 per share. You get the trend here, right? I don't know if I had to say that, but you're closing above $5 per share more times than not. You're showing good demand more times than not. That leads me to believe a little bit of bullish, activity is coming for AMC stock. Let me know what you guys think about this down below in the comment section. If you do break out above the 100-day moving average, next stop is this ascending line. This is going to be the next level you want to break out above, about $4 or $5.30 per share. You break out above that, $6 per share is your next stop. Take into consideration everything that was said in this video about collateral essentially getting squeezed and more margin that will need to be put available for AMC short positions, and then think about that in context if AMC does get a positive catalyst and the stock is able to rally, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I'll see you in the next one.